Hello, welcome to another video tutorial with Kukura Capital. This is episode 3 of our video tutorials and episode 1 of our moving average mini series. Now this is the first episode where we're going to be introducing how a moving average works and how you can use it to become a profitable and successful trader. Now moving averages are by far one of the most used indicators, and that's fair enough because they are such a great indicator, especially for beginners. And the reason is because if you look at a chart, now in this example I want to use the USD Canadian USD South African Rand, just because it's a currency pair that we're all familiar with. So let me just open that USD and the South African Rand, opening that chart. It's gonna open. Click. So I'm just going to open that because we're all familiar with the USD South African Rand. Also, if there's any spikes, I can reference to how it is a result of economic release, and you'd know because obviously you're living here in this country, you're familiar with the politics and how it affects the currency pair. Okay, it's going to open now. So this is in this example, this is our currency pair that we're using, the USD South African Rand, and the time frame, I'm just going to leave it on the 1 hour. This is where you can change your time frames if you're not familiar with how that works. This is 1 minute and this is 1 month. I'm just going to change how it looks so that everything is much clearer. I'm just going to use black on white color scheme, and I'm going to choose for my bullish candles, which is going up, green, and then for my bearish candles I'm going to choose red, which will show me it's going down. So I'm just going to match that here. Okay, and then I'm just going to choose the Japanese candlestick type, and I'm going to zoom in, and I'm just going to remove the grid just because I think it makes everything much clearer. So as I mentioned, we're using this is a tutorial about moving averages. Now the great thing about moving averages is if you look at your charts, you do see variations in the price. There's never going to be a situation where you're just going all the way straight, all the way up. This is price action. It's going to have variations, reversals, etc. So what your moving average does, it basically smooths out your price movement and produces an average that will show you an indication or a guide of what the trend is. So obviously if your moving average is going upwards, it's an indication that you're in an uptrend. If it's going down, it's an indication that you're in a downtrend. That's just like a simple basic summary of moving average. There is a calculation. It's based on the averages of your closing prices, and if you want to know more about that, you can check our PowerPoints that are available at kukuracapital.co.za. Now in this instance, I'm just going to put one moving average. Now there are different ways in which you can use moving averages. We're going to focus on 3, and that's why this mini series consists of 3 episodes explaining the different ways you can use your moving average in your trading strategy. Now in this example, we're just going to be focusing on one moving average, and we're going to focus on how to interpret it and how to basically get a basic understanding of what certain things mean when our moving averages is either below or underneath the chart. Now in our PowerPoint slides, you will see that we reference to different time periods and how they are effective and how you use them. For the shorter time periods, you're going to use 10 to 20. For your moving average, and for long-term trading to see, you're going to use about 50 and between 50 and 200. So in this example, I'm going to be using 10 and 20. In our second episode, we'll be discussing also the different effects of using different time periods with your moving average. So how you add your moving average, you go to insert and you go to indicator, and then you go to trend, and then you see it's moving average. Now in this example, we're using a simple moving average. There are 4 types of moving averages, but the 2 main ones that people focus on is simple and exponential. If you want to learn more about all 4, and there's actually 8, but then most traders only discuss 4 and most traders only use 2. I don't know, it's always halved, but yeah, that's basically the ones you have to focus on, simple and exponential. If you want to know more about that, the notes are available on our PowerPoints, which are available on our website, kukuracapital.co.za. So when you are setting up your moving average, The most important thing to obviously focus on is which one you've chosen, the simple, exponential. There are the other two that I did mention, but technically there's actually a broader category of moving averages. And then you choose your time period. Now, as I mentioned, we will be discussing the time periods and their effect later on in our second episode, but in this instance we're going to be focusing on the range between 10 and 20. You can use 14, it's the standard one, but for this example I'm going to be using 10, and I'll also use 20 in another example currency pair in this episode. So I'm just clicking on 10. You can choose whatever color you want. Obviously you want something that's quite distinct and will stand out, so I'm going to stick with blue, and you can choose what kind of thickness. This is just to help you to see and identify what's going on with your moving average. I'm just going to stick with this one, and then I press OK, and there we go, we have our moving average. Now obviously because it's a slightly small time frame, it is going to be very close to our chart, but you're going to see with larger time periods it is quite spread out. So the basic interpretation is really straightforward. If you see your moving average, that is your simple moving average, that is below your chart, is an indication of an uptrend. So if you see, as you can see here, it's below and you get your chart is moving up. Also in this case, where it's below it's moving up, where it's below it's moving up. You can see this quite clearly. I'm actually going to circle this just to highlight. Now I'm using a standard metaphor trading platform. You're going to see in other video tutorials I use different software to actually draw on the graphs for teaching purposes, but you don't have to do this when you're trading. This is just to indicate what is happening with our charts. So I simply placed some arrows where we're seeing that the moving average is below the chart and is showing that it's going up. So I just placed an arrow about here. As you can see, where you have your moving average being below, you're seeing that your chart moves up. So obviously the opposite means that when you're moving, your average is above your chart, it is an indication that you are in a downtrend. As you can see from here, we have our moving average literally above, on top of our chart, and we see a strong downtrend. And then as soon as it now gets below our chart, we start to see an uptrend. So that's really straightforward, really simple interpretation, and that's exactly how people use it. When they see a change in which your chart now, it moves, your moving average goes above or below the chart, it's an indication of a change in the trend, and that is when normally you'd either enter or exit your trade. So it's really straightforward, nothing too complicated. From this, you can clearly see that your moving average indicates to you the trend that you're in, how strong your trend is, and whether your trend is about to end. Now, when you see that your moving average is starting to approach your graph and is about to cross over, that is a good indication that your trend is about to be finished. In addition to that, a moving average is really great because you can also interpret it the way that you interpret support and resistance lines. When your moving average is below, you can regard that to be a support, that it's not going to be broken at that point. When you see that it's above, you can regard that to be your resistance level. Now we have done a complete series on support and resistance levels. Support and resistance levels are key to any great successful trading, and so is moving average. So are moving averages. Now in our second episode, we're going to be discussing the different time periods, how to choose a good time period. Now it's very important that you do note that in this example we have done a 10 time period of a simple moving average, and in the other examples we'll be covering 20, 50 and 200 and seeing the different effects, because it is quite significant the difference that you get in comparison to when you're using a small time period and a large time period. And we're referencing to the time period of our moving average and not necessarily our time frames of the chart. And do note that moving averages can be used for any time frame, so even if you're trading minutes charge or a monthly charge, you can still apply moving averages to your trading strategy. Therefore, just to recap, whenever your moving average is below your chart, it is an indication that you are in an uptrend, as I've highlighted in this area. When your moving average is above your chart, it is an indication that you're in a downtrend, as I highlighted in this area. And just to show, I just picked any other spot, and this is also the same. Once you have it above your chart, you have yourself in a downtrend. Now what's important, now as you can see, if you had traded in this opportunity, you would have won a lot of money if you had put a sale. So how you can calculate that, now this is because your crosshair tool, and you'll be seeing us using it a lot. If you had entered here and you just drag here, it tells you how many pips you would have moved. So basically it's 500, no, I'm not having a zoom moment, 50,982 points, which is about 5,098 pips. Now if you are trading and you move about 5,098 pips, and each pip at a minimum of volume 0.1, that's already 5,098 rand. And if you were trading at a volume of, let's say, 1, you would have definitely, I mean, now you already made 50,000 rand. So yeah, there is a lot of money in forex trading, and this is just one example of when you could have made a lot of money if you had stuck it out using your moving average. However, you would never trade just based on the information gathered from one indicator. However, what you would do is get confirmation from other indicators. And also, a lot of people would have probably missed out on this really nice trade, and the reason is because they would have just probably, you know, made some money here and then stopped. But there is a great way. We will be doing a tutorial on trailing stops, which are what I believe to be the absolute secret to success. But if you do want to know what our next video tutorials are going to be, do subscribe to our newsletter at kakuracapital.co.za. Thank you for watching. If you have any queries, any questions, any concerns, do feel free to either email us at contact@kakuracapital.co.za, or you can send us a message at our live forum on the website. Thanks for watching.